Thanks, everybody, for attending today. Apologize that we've rescheduled this a few times, but everybody's feeling better, and we'll get right into it. We should take about under 20 minutes to get through this. Essentially, we just want to provide you guys some additional information on some of the opportunities here in Cleveland, Ohio, that the market conditions have provided a great opportunity to buy discounted both commercial and single-family cash flow properties. A little bit about us. Our president, Sean Whalen, who is unable to make it due to the flu, so I'm filling in. My name's Wayne Conway. I'm the Director of Marketing here at BH&R Properties. Essentially, we've been in real estate for over 20 years as an investor, as a property manager, and then really in the last few years as a turnkey property provider. We work with the vast majority of our clients are international or absentee or owners. We really don't work with any investors locally. It's really either out-of-state or out-of-country investors. We have personal relationships with both realtors, probate attorneys, and asset managers. Kind of over the years, Sean has developed these relationships from, at one time he was advertising on TV that he would buy properties, and these probate attorneys, and he's built these relationships so that we oftentimes get first dibs on some discounted properties that are available. And really kind of the core of it is, hey, we're Clevelanders. We know the market. We kind of understand the market, and we know oftentimes through through learning as we go along, we've really narrowed down the areas where we buy to certain areas based on a number of criteria that we'll get into. So, again, we know where to buy, and most importantly, where not to buy. Just a little bit of information kind of on the supply of bank-owned properties. As you know, across the country, there was a number of pretty much every market you could get a discounted bank-owned property relatively easily. Well, that supply is diminishing, and in many markets, really there's no inventory whatsoever left over. And a couple articles, in the LA Times, essentially deals on foreclosed homes are dwindling, and according to TransUnion, mortgage delinquency rate continues to fall, which is a good thing. However, obviously that's eliminating the supply of bank-owned properties. However, with that said, Cleveland and Pittsburgh, according to the Washington Post and Zillow articles, still remains a good market where you can get a significant discount. In Cleveland here, about almost 26% below fair market value is where some of these properties and some of these opportunities are available. So again, we have inventory, and they are still at discounted prices. For a number of you who I know really none of you, I guess one attendee is from the state of Ohio, so you probably know a little more about Ohio, but really to give you a little bit of background, Cleveland and Northeast Ohio is a really vibrant community. There's over $12 billion in major capital investment, and it contains over a $170 billion economy. There's almost 3 million people in Northeast Ohio. It's a livable city. We are named, according to MSN, the second coolest city in the Midwest. So, for us in the Midwest, that's a pretty thing. For those of you on California and the East Coast, you may be like, well, okay, cool city in the Midwest is kind of an oxymoron. But anyway, hey, it's, more and more people are discovering Cleveland. We have the fastest healthcare economy in the U.S., and we have the nation's first global center for health innovation. It's essentially a 365-day-a-year convention center dedicated to medical devices, medicine, and healthcare. Last year, tech funding was up 34% in our region alone versus a 10% decrease nationally. So there's a lot of things going on in Cleveland. 70% of the Fortune 500 companies have a presence here. We have 10 Fortune 500 companies that are headquartered here. And a lot of, something that people don't really realize, we have over 27 area colleges and universities. So we have a very diverse economy, very vibrant economy. We're not a, we used to be a steel manufacturing type town. But I actually just heard that Ford Motor Company is shifting production of one of their newer engines from Spain to a Cleveland plant here. So that's exciting news. It's a $250 million project and adding, I think they said 400 or 500 new jobs. That was just announced this morning. So a lot of good things going on in Cleveland. Other reasons why, to consider it, it's very affordable. Our average in the market in Northeast Ohio, the average median home price is $109,000. Most of our inventory is kind of between $55,000 and $75,000 price wholesale, and average home prices are up a little over 13% versus in 2012 versus 2011, up 30% over the last 5 years. But overall, really since 2000, we've only been up about 5%. We're kind of that slow and steady, stable market. You're not going to get rich on appreciation, things like that. But hey, there's also a downside. If prices do go down, we're just that slow, steady, 5% a year. And then, as we mentioned, that Washington Post article, we have plenty of bank-owned properties available. Although we are seeing more and more competition for some of these properties, but again, there's still good supply of that. Rental demand. Cleveland really is high rental demand, one of the best price-to-rent ratios in the nation, and demand in certain markets are very high. So, hey, as an investor, this is a pretty good overall condition to consider. Our approach is we buy in owner-occupied areas. Because we have an in-house management company, we want to buy in areas where we can find good tenants, where people want to live and are not forced to live. Secondly, we purchase in communities that require a point-of-sale inspection, which is really important. One, it really forces each of the neighborhoods, each of the homeowners to take care of their properties. It forces investors who are going in to buy, or homeowners to purchase a property, they need to fix up, update, keep the houses painted, keep them in good shape, because the city is going to monitor that. And additionally, it also is important because it keeps out some of our competition, or at least kind of the mom and pops or the guy with the pickup truck, because typically we will purchase a home bank-owned. The city will give us a list of point-of-sale inspection. They'll give us a list of items that we need to put money in escrow, and we don't get that money back until that city inspects the property and say, okay, yeah, everything was made, everything was painted, the electrical was updated, everything is met on our list. Here, we'll release the funds. So again, we may buy a house for $30,000 or $35,000. It may require $15,000 additional funds put in escrow, and so for a lot of people who are and then you still have to do the rehab, and then you get that $15,000 out. So it kind of causes some additional funds to be required as part of that rehab. We provide our investors, we're very transparent, a detailed report of the acquisition cost, the rehab scope, the anticipated rent, and future fair market value. We want you to be educated on each of these properties. We don't want to hide anything. We'll tell you how much we're going to make on each of the properties. I mean, we're transparent that way. We're not hiding everything in the rehab. We want you to be comfortable, and we feel we do a very good job, and we want to be compensated for that. But you're going to know as an investor what exactly that is. We will completely rehab each property unless there's something major, and we typically will avoid those properties. Most of our rehab is completed within 30 days. It's been a little tough this winter. We've actually had a lot of snow, a lot of cold, so some of the properties which we've needed to put a new roof on and do some exterior painting, we just haven't had those days above 45 where it was warm enough for us to paint, or a lot of snow. But typically we will give you an accurate estimate as far as a target completion date. Another thing we do is we actively market each property as a rent-to-own. We try to either that or we try to sell the property outright on the MLS. That rent-owned tenant, on a cash flow basis, obviously there's advantages. And you'll know as an investor, if we are targeting a rent-to-own tenant, you'll know up front what that rent-to-own price is. Essentially, the tenant will sign a 12-month lease. We will help them. We have programs in place to get them qualified for a mortgage, and you will know that execution price, what that sale price is down the road. So you'll know exactly, okay, I've got my investment of, say, $50,000 in the property. I've got a rent-to-own target acquisition price of $70,000. So you'll know that information up front. If you're saying, hey, listen, no, I just want to do, I just want cash flow. I don't want to market to a rent zone. Let us know. We want to, obviously put together a program that makes sense for everybody. The majority of our properties are sold wholesale as cash flow investments and provide our investors significant equity at closing. We feel that's important. We want you to have some equity built in, and whether that means you can pull out funds as far as an equity loan to make additional purchases, or just, hey, you're protected, hedging against loss of value. If you have that built-in equity, it's a good opportunity. And then, as I mentioned, we have an in-house full-service property management company that will find a tenant, will manage that process, manage the screening, manage the property. You'll have access to all that information, and they're a real good, management group that, typically last year we had under 2% vacancy rate on our property. So the property management team does a very good job of managing the properties, managing expenses, as well as keeping tenants in place. So the opportunity to buy bank-owned direct, really working with us and through our relationships and our experience within the market, knowing what neighborhoods to buy in, what neighborhoods to avoid. Really we're going to be able to provide you with some good opportunities, that you can either purchase direct from the bank, work with us as far as you're going to fund the purchase, you're going to fund the rehab, and then we'll get a tenant in place. Or if some investors say, hey, listen, I much prefer just a turnkey approach. I want to buy a property that's been fully rehabbed, a tenant in place. I know what my returns are going to be. We can do that as well. So, we offer each investor on each opportunity or each property that opportunity. Obviously, if you're going to buy bank-owned direct, there's a little bit of sense of urgency if we come across it. Some of these deals, come together quickly. We have a probate attorney or a bank come to us and say, okay, yeah, we'll take that offer. However, you need to close in 14 days. So obviously, contact us if you're interested in this. We'll get you on the list. We'll get a sense of what you're looking for, and then we'll be able to, if something comes up, we'll contact you and say, hey, here's something, here's the scope, here's the financials. What do you think? Are you interested? And let's, just kind of review some of these. Here is on a commercial property, the 17-unit apartment. It's near University Circle, so near Case Western Reserve, near University Hospitals, near the Cleveland Clinic. It's kind of a transitional neighborhood. We like to get in and and get in and get the opportunities to purchase a property as the neighborhood is slowly transitioning in a positive light. Each unit is a 2-bedroom, 1-bath, $93,000 in gross rent. The price on this is $353,000, about $28,000 per unit. We will be rehabbing this, separately metered furnace, updated electrical, plumbing, windows, paint, flooring. The important part of this in a lot of these older buildings is, they've got these old boilers, old heat that, hey, in Cleveland, today it's, I think, 17 degrees out. The fact that we have individually metered furnace, we're transitioning these, hey, so you're not stuck with a, $8,000 a year gas bill on these. So, there's things like that to consider. Next property we have is a 6-unit apartment building. It's near the Cleveland Clinic. It's actually, here's a view across the street. It's in new construction. Each unit is a 2-bedroom, 1-bath, about $47,000 in gross rent, cap rate of 17%. Price on this, $180,000. It's about $30,000 per unit. We say when rehab is complete, when it's fully leased, you're looking at a fair market value of at least $350,000. Again, separately metered furnaces, updated electrical, new plumbing, new windows, new paint and flooring. We see this as an opportunity. Again, this is in the city of Cleveland, but there's brand new construction in the neighborhood. It's near the clinic. We feel this is a great opportunity. Next property is a single-family home. It's in the city of Cleveland Heights. It's near a historical area within Cleveland Heights. Most of the houses in Cleveland Heights are either at least 3-bedroom, 2-bath, 1.5 bath. This is a 2-bath. The purchase price $40,000, $20,000 in rehab, includes a new furnace, hot water tank, paint, updated electrical, updated plumbing, granite counters, updated bathroom, paint, finished basement. $1,000 a month. Your net cap on 13.8% net on that, and this is available. We feel the fair market on this property, I think is on the next slide, is about $90,000. These aren't our numbers. Here, if we take a look at some comps, here's the property right here. It's priced at $60,000, 3-bedroom, 2-bath. We have Yellowstone, which is right nearby, 3-bed, 1.5 bath for $102. Parkdale, 3-bedroom, 1.5 bath, $105. And Pembroke, $140, 3-bedroom, 1 bath. So here are recent comps. So again, this is the type of opportunity that we have. People always ask, well, why don't we just sell them fair market value? Again, if an investor is interested in doing that, our whole approach is we want to provide good opportunities for the investors. We want to make some money along the way, but ultimately, our investors tend to buy a property, buy that second property, buy that third property, buy that fourth property, as opposed to just doing one-offs, flips, things like that. We really want to involve the investor and get you where you're comfortable working with us, so we can come to you with a pre-rehab, bank-owned opportunity. It looks good. Boom, we go, and the more business more clients we can do, the more business we can work with. That's just kind of our approach. This next one is Wallingford. It's in South Euclid. It's another suburb. We're putting a new roof on this. Obviously, this unit needs to be painted, but here you're looking at a total investment of $55,000. We'll put in a new roof, hot furnace, hot water tank, interior paint, exterior paint, new vanity, toilet, shower enclosure. Net cap rate 13.7% on a gross rate of $950 a month. Actually, that's $875. So somewhere in there, about 900, actually $9.25. Sorry. And then here's to give you some idea. Total investment of $55. The fair market value on that is $70. There's a house literally a couple doors down that sold for $111,000. It's a 3-bedroom, 1 bath. I mean, that property is completely decked out. It has granite, finished basement. Again, if you go to us and we put together on our pre-rehab and you say, hey, listen, I'm really looking to maximize, a short-term sale on this, or really maximize resale value, hey, we can go in and say, okay, here's our standard rehab, but really to finish the basement, to add, granite counters, ceramic tile, things like that. We could scope that out, provide you those numbers. So, if we're looking for really to maximize fair market value, we can take that approach as well. And then some other houses in the area, $66,000, $78,000, again, nearby. So that's kind of what you're looking at. The next slide is Zeeman in Euclid. Euclid's another inner ring suburb of Cleveland. It's a 4-bedroom, 1 bath. It is $900 per month gross. This, I believe, does have a furnished basement. We'll put on a new roof, updated electric, new flooring, paint, a new furnace, new hot water tank, all new mechanicals. Essentially, as an investor, yes, we'll make it look pretty. We'll put flooring in. We'll put, new carpet. We'll paint. We'll, make it look nice. But as an investor, we also want to make it so if you're holding on to this, that tenant that goes into place, they're not going to have any issues for 5 years. There's the biggest issue is what? You're going to be hot water tank or a furnace going out. Those are going to be your biggest expenses. We're updating that. Providing new mechanicals in that regard, so that's something you don't have to worry about. The purchase price on this was $32. The rehab and I should say on each of these, the rehab includes our fee. So what we'll provide you is, a quote from the contractor that we work with, and then in that will be our fee. So all these numbers that I'm quoting you. And this happens to be 50, we'll do the math here, $51,000. That includes our fee. What is our fee? Typically, between 10 and 15% is what we're trying to work with. But again, it provides you a good return on that as well. In this property, we see a fair market value of about $80,000, total investment of $51,000. And this is, again, based on comps in the area. So here's our property. At $60,000, price at $60,000, so that would be turnkey price, and then the total the wholesale price or pre-investment price. Actually, we sold this one. Actually sold to an investor. We're closing on it, I believe Friday in a couple days. He paid $51,000. So here's some other $80,000 for a 4-bedroom, 2-bath. And this may be one where you say, we take a look at it and say, hey, listen, for another $5,000-6,000, let's put a full bath in the basement. Let's try to get a little bit more value in that. And if we're looking for a shorter term or a rent-owned tenant, because these comps come in at a higher, there's more room. But the investor we're working on this was, hey, they're perfectly happy with the return at I think $900 a month rent, and potentially we would look to move this to a rent-to-own tenant and somewhere in that $75,000 to $80,000 price point. Next, I think that may be it actually. But again, it's something that we would always, there's always opportunities to, just contact us, let us know what is, what may be the opportunity available, kind of get on our list and see what may be, available. And if you just contact us, like I said, get on our list. We can send you upcoming opportunities. We can, really provide you, the opportunity to buy significantly discounted bank-owned properties direct. We'll rehab them. We'll update the property. We'll either lease them or find a rent-to-own tenant. Flipping, again, we try not to do that. We feel our rent-to-own is a great opportunity to hold it, not necessarily long-term, but under 12 months. You're going to get the cash flow return as that tenant is working in our program to get financing. We feel that's really a great opportunity that way. But again, if you have any questions, we try to keep our website buyholdrent.com updated with properties. These new ones, really the best way to do it would be to contact us and just say, hey, listen, I'm interested. This is what I'm looking for. This is the type of return. And then when we have something come up, we'll get in touch with you pronto. You can contact us, Sean, the president. His email is buyholdrent@gmail.com, or myself, Wayne Conway, at wayne@buyholdrent.com. Or you can call, that's my cell phone, 440-668-1925. Or you can contact us at our website, buyholdrent.com. Again, appreciate everybody's time this evening. Hope you're having a great day, and we look forward to talking to you soon. Thanks a lot.